This breaking news that S&P has downgraded the government-backed Fannie Mae and Freddie Mac, and take a look at what's going on in the markets. Down almost 350 points. A bad day just keeps getting worse. The U.S. following what has been a sell-off around the world. Ebong Eka is a certified public accountant, and we've watched this drop come very quickly. Do you think this is
challenging for people to buy homes?
Well, let me ask you about the S&P in general, and of course the big action that was taken against the U.S. Where are people likely to feel this the most, do you think? Is it going to be in their 401ks? Is it going to be in interest payments?
It's going to be a little bit more in interest payments because there are a lot of consumer loans. The interest rates on a lot of consumer loans are actually tied to Treasury interest rates. So as a result of the downgrade, interest rates are most likely going to rise. And so people who have variable rate interests on certain consumer loans, whether it's cars or other credit card debt, they're going to be paying more out of pocket for interest payments.
And I'm looking at these numbers just steadily going up, heading toward 400. And I'm sure a lot of people are sitting back and watching and saying, maybe I just need to bail, get out of the stock market altogether in favor of something else. And I mean, we saw what gold is doing. It's at a record high. You know, it's doubled in price in just the last couple of years. What is the smart move for the average investor? Take action or stay put?
Well, the biggest thing you're hearing nowadays, especially in commercials, is go out and buy lots of gold. Well, the problem is, like you just said, gold is at a record high. That's the problem. The whole point is you don't buy high and then sell low. So what you want to do is, looking at the market now, there's a great opportunity to find great discounts and bargains in a lot of funds, especially if you're investing for the long term. If you want to go buy gold now, that's fine, and you may want to diversify your holdings, but the last thing you want to do is take all your money out of the market and then make a run for the gold stores.
Yeah, because I think a lot of people are looking at it and saying, you know, 2 years ago I thought it hit an all-time high, or 2 months ago I thought it hit an all-time high. So, boy, the temptation's pretty strong.
I completely agree. But the last thing you want to do is be reactionary. You can't be as fickle as the market.
All right, Ebong Eka, it's good to see you. And again, we're going to continue to watch the markets this morning. Now about 360 points. Oh, it's jumping all around, but it's...
Enjoy Christmas red. He's a financial expert, CPA as well. Ebong Eka joins us now. And you and I were already talking about this because I was talking to you about my woes of going there for Black Friday. What I wanted was already gone. Now I'm losing focus because I woke up at 5 in the morning and I've got to buy something at half off, right? That could be a huge mistake. No plan, no focus.
Well, thanks for having me, Michael.
Yeah.
But one of the biggest things that the stores want you to do is they want you to get in there early so that maybe they can tease you with some items and then you can buy some other things at full price. But first things first, the first thing you should always do is create a budget or a plan. That'll allow you to focus on what you need and how you can get that.
That's huge. I mean, because it was very tempting. I'm up early. Again, I got to buy something, but I would have spent a bunch of money, and it wasn't even the gifts people wanted. So
yeah, and you're half asleep, and you've been eating turkey, and you're on tryptophan and everything else. It's a nightmare. But the second thing I always tell people, the second biggest thing is if you miss Black Friday like you did, and I did because I wanted to sleep, if you miss Black Friday, there's also Cyber Monday. On Monday, it's very similar to Black Friday where you...
I was talking about. This is the Rose Garden as we wait for the president. The numbers, 9.2%, not good. Jobs created, 18,000, 100,000 below what the expectations were. All of those not good. It's the fewest in 9 months, by the way. Money expert Ebong Eka is a certified public accountant and writes the small business blog Money Mentoring Minute. Ebong, thank you for joining us today. And this number, first of all, what is your reaction to this when you take a look at the importance of jobs being created, not only in large businesses, but in small businesses?
Well, for small businesses, the jobs number actually is really important. And although it's only 1%, a point percent of a difference, it's really important from a small business perspective because small businesses, there are a lot of small businesses out there who are standing around with their hands in their pockets waiting for someone else to make the first move. There's a lot of trepidation out there when it comes to hiring.
All right, so small businesses are also said, new businesses rather, are said to be those that create jobs. Now, as you have looked at this, you have some ideas on how the government can actually help to boost hiring in those spaces. Number one, you say access to credit.
That's important. I think for a lot of people now, we're moving towards a service-based industry or service-based economy. So as a result, we need to focus more on helping these people, these new small business owners, as well as existing small businesses, the ability to have access to credit, as well as other financing opportunities, because that's what helps or actually provides small business owners the ability to hire more workers.
Yeah, there's the cattle behind you. I see it. All right, so we got to talk about this unemployment rate because, you know, Washington's trying to come up with a plan, but there's a huge piece of me that says, you know how you get the people back to work? Get the government the heck out.
No, I completely agree. It's good to see you, Tracy. We've missed you. First and foremost, one of the first things that we need to do is we need to provide small businesses with the ability to have adequate financing and capital. That's the biggest thing. You can't hire workers with lollipops and promises. You need actual cash. And since the banks have been freezing up lending, that's one of the problems that we're running into, and I'm running into with some of my clients as it relates to hiring workers.
So, and what we know, though, unfortunately, is that the banks actually do have money. But the uncertainty in the overall economy is what's preventing them from actually loaning money. And you can't blame them, right? I can't make a loan to you if I don't know, you know, for all I know, you're going to get laid off in 6 months.
You're right. Everybody's actually sitting on the sidelines, including small business owners as well as the banks. The banks are sitting on wads of cash in their proverbial mattresses like we are. And so they're sitting around waiting to see what's going to happen with the debt ceiling issue, what's going to happen in the markets and stability-wise. Because this is what I'm hearing. People don't want to invest in new workers and in new opportunities only for their tax rates to skyrocket, only for the market to tank and for them to lose, you know, revenue share as well as growth and market share.
One of the things, so the IRS pushed the tax deadline back to Monday, the 18th. If you're among the 50 million or so Americans who will be spending the weekend gathering W-2s and 1099s, we have your tax 911. And I'm joined by certified public accountant and money expert, Ebong Eka, who has some last-minute advice. Ebong, good to see you. How are you?
I'm well. Thanks for having me.
Okay, first, you say file an extension if you can't meet Monday's deadline. And I've got to tell you, I got caught with this last year. I owed money, and then after I filed the extension, I had a big fine. So,
well, there are a lot of people who go through that, and that's a problem. If you're late with filing your tax return, please file an extension. Even if you have money, even if you have taxes that are due, you still have to file an extension. And it's very simple. And here's why you do that. Because if you don't, the clock starts ticking on your penalties. There are 3 things that the IRS will charge you with. First will be the failure to file penalty. And then they'll also charge you with a failure to pay timely. And then the last will be interest on that. And that could be a lot of money, as you know, Chris.
yeah, unfortunately. All right, so let's talk about tax.
Welcome back. Just about everybody's thought about starting a business. At least I have. And it's a really exciting dream. You know, you really think you can do it, but it's really hard. Doesn't mean you'll start a successful business, but practice makes perfect. And it sure beats welfare, and we are here to help. If you think you're an entrepreneur, email us your idea, and we might give you a shot at facing the power panel. Tonight's entrepreneur, Matt Potts. He thinks he's about to revolutionize the flip-flop. Tonight's power panel, small business owner Amelia Antonetti, FTN financial columnist Lindsay Piegza, and small business consultant Ebong Eka. So, Matt, make your pitch.
Good evening. Yes. And then introduce new categories of product,
there you go,
including
Ebong.
children's footwear.
Let's take it to Ebong. What do you think?
One of the concerns I have with the shoe, and I like the concept because I've gone through something similar. But one of the things a concern I have about the shoe is whether or not it's waterproof. Is this flip-flop waterproof? If I wear this to the beach or I'm on a cruise, am I going to have to worry about my cash getting soaked or my cards having problems getting sand in my?
That's a good point. What do you say, Matt?
So what we do.
Our most valuable panel back with us, entrepreneur Amelia Antonetti, Lee Hawkins of the Wall Street Journal, and Ebong Eka of Ericorp Consulting. Let's fire up the clock.
Is not the best strategy for him.
Okay, so we'll pick up on this point, though. So, Amelia, I'll send it over to Ebong. Pick it up where Amelia just left off. You know, we know that Chris Christie, right, has plenty of money, so if he's testing the waters, what does he hope to come out of Iowa, say, if he's just experimenting?
Well, maybe he just wants to dip his toe in to see if the water's warm. But more importantly, donors don't want to put their money in slot machines where the chances of winning are 0. And because the GOP, the field right now is kind of uncertain, that's why Christie's coming out as a potential nominee. But he's not going to do it.
And so why do you think it's a bad idea?
Exactly what he's saying. The numbers don't match.